Welcome back. Well, let's put focus on Ixigo now. This is the first quarterly performance of Ixigo since its listing. It is also known as Le Travenues Technology. So remember, it listed on the 18th of June. The issue price was 93 rupees. The stock is at 164 right now, so it's done pretty well. And travel and tourism is a space that has just been booming, right? So they're in the right place at the right time, perhaps. The platform reported a 20% revenue growth versus an industry growth of 18%. We have the company's MD and Group CEO, Aloke Bajpai, the Chairman and Director and Group co-CEO Rajnish Kumar is also with us. Rajnish and Aloke, thank you so much for joining us and taking the time out to speak to CNBC TV18. It's been a great listing for you folks and good growth, right sector, right time. But I want to ask you about the way forward, right? Rajnish, let me begin with you. What kind of growth are you projecting? I mean, you have been growing faster than the industry for a while, but is this 20-25% growth something that is sustainable over the next couple of years?
I mean, I think more than the growth, I think what I would like to comment about is the fact that the reason why we have been growing incrementally year over year is because inherently because of the ability to monetize from the large captive user base that we have, and the amount of innovations that we have done on the ancillary and value-added services side, and the ability to better cross-sell and upsell within our ecosystem. So remember that we made two amazing acquisitions in the form of Abhibus and Confirm Ticket, and those two apps were completely focused on trains and buses respectively. However, they have very large captive audience as well, and our synergies on flights and hotel side, we are trying to get those products rolled out on those platforms as well efficiently, and this ability to monetize internally within our ecosystem of apps and our captive user base is what is resulting in this in most of the growth that we have. On the flight side, I think it's important to see that although the market has been growing very sluggishly because of the ecosystem level constraints, capacity constraints, and because of that, airfares have been fairly high. You would have seen last couple of quarters have seen like just single digit YOY growth. However, our growth has been pretty good thanks to the product innovations that we have made, and we are like focusing on cross-selling and upselling from the tier 2, tier 3 audience that we have. Like we did almost like 480 million annual active users in FY24. So that ability to cross-sell and upsell flights from those tier 2, 3 cities where airports have come up recently, is one of the reasons, and the other is product innovation. So in the form of products like WebCheck, etc., that we have created, and also the ability to keep innovating on products, ancillary products like Assured and Assured Flex, which continue to see great uptick on flights business as well.
Got it. I just wanted some numbers if you can share with us. So across your verticals, right, flight, train, bus, do you think this growth, I mean, in flight, you've seen a 30% growth in Q4, for example, on the top line. Is it something that you can hold on to? Because there's plenty of competition now in this space as well. There is a lot of price competitiveness that is picked up in this space too. So in flight, you've seen about 30% growth. Train has been about 18%. Bus has been 24%. Are these run rates that you can sustain in FY25?
Let me take that very quickly. So one thing we want to highlight here is that look at the passenger segment level on the flight side. We've grown almost 77% year on year, right? And even if you look at for the quarter, we grew at almost 42%. In fact, for the quarter, the growth in the overall market was in single digits, like Rajnish highlighted. Now, our strategy on that side is very clear that we are willing to let go some operating leverage, if it comes at the cost of having slightly lower percentage contribution margin, we are okay with that. Because we believe that there is a large underserved market where tier 2, 3 airports are coming up and where a lot of train users are migrating into flights. And we can become the first port of call for people from tier 2, 3 towns who actually start flying. And therefore, it's an unprecedented opportunity in this market at this point of time to go and capture more market share, which is coming from new flyers, right? So I think our strategy will be to incentivize new bookers, spend on performance and brand and make sure that we capture market share on the flight side and continue growing faster than the market there. Whereas on the train side, like overall market is again not growing that fast, right? I mean, there's a single-digit percentage capacity growth. So again, there we are growing much faster than the market, and we think that low to mid-teens kind of growth on trains for next few years is something that we are looking at. On the bus side, look, again, it's an under-penetrated market. Less than 20% of bus bookings get done online. And we are the second largest player, but we are also one of the fastest growing ones there. So if we are able to just maintain slightly better growth than the market, I think we should have a right to continue growing this way. But what I would guide is this year, overall market is going to grow slower. Overall OTA market is going to grow slower than it was growing here for these capacity constraint reasons across flight and train.
Okay. Gentlemen, good morning. Great to have both of you here. Prashant this side. Alok, just to get one number out of the way. So we've got some analysts making estimates for the full year FY25. You did 656 crores in revenues in FY24. Can you do north of 800 crores for the full year this year? I'm not asking for a specific number.
Look, I think our endeavor will be to grow faster than the overall market on the OTA side. That's how we would love to guide.
800 plus? I'm sorry to,
I think we've been given, we've just entered the public markets. We don't want to give any hard guidance at this point. We would want to just say that our endeavor will be to grow fast. Our endeavor will be to let go some contribution margin on categories like flights and buses in order to achieve faster growth. But again, we don't want to do it at the cost of bottom line either.
Okay, got it. So then, but I think margins then, I mean, as you build it out, as you said, right? So many first-time flyers. And as you try and capture, because established players already have, you're kind of used to an app or to book your travel. But you got a lot of first-time buyers coming through, and you'd want to go after them. And you said you'd be willing to give up on some contribution margin. So as you build this out and you scale in that segment, should we assume margins perhaps will be a little weaker for the foreseeable future? Not weaker, but I'm saying what would it be at? I mean, if you can give us a number, that'll be great.
Yes, at a percentage contribution margin level, what we are saying is that we would be willing to live with lesser than where we are at on flights and buses. At an absolute total contribution margin, which is, if you look at even FY24 versus FY23, our total contribution margin kept growing quite rapidly, 35%, close to 34.7% growth. And for the quarter, about 8% growth. So I think we would want to keep expanding our total contribution margin. That is clearly something we don't want to let go of. But again, if we have to let go a few percentage points on flight and bus in order to grow faster, we won't be shy of doing that.
All right. Hi, gentlemen. Just a couple of quick questions before we let you go. What's the expected share of revenue from hotels?
I think it's too early to comment on hotels as of now, because like we said, it's been I think even the last call we mentioned that it's been like barely 6 months, right, since we launched hotels. So
no, I'm asking you for in the next few years, you will have a target, right? As of now, it's very, very small. But scaling up of that is something that you'll have briefly mentioned as well. So if you could tell us, say in the next 4-5 years, where does it move to?
Absolutely. So, we are extremely satisfied with the growth that we are seeing on hotels. I mean, we are almost seeing double-digit growth, month on month. But it's a very small base that we're looking at right now, right? Because this is very early days. Right now, our focus is, the good thing about this growth is that this growth is not coming from external user acquisition. We are not using any external marketing channel or, spending money to acquire users to grow hotels. What is happening is that because of this massive distribution that is inbuilt in our app ecosystem, 480 million annual active users. So this captive user base is where we are trying to cross-sell and upsell to on the hotel side. And that growth is coming entirely because of that. So over a period of time, you can see that as people get exposed to this product, more and more. I think this crossover of people among these MEUs who are exposed to hotels as a product will keep on significantly increasing. Right? And obviously, we want this to be one of the most significant verticals for us going forward in the next few years. And that's the whole point, right? Because we know that the monetization is better, stronger. There are better take rates in hotels. And so we would continue our endeavors to create a stronger product market fit there. And also build out very deep supply over the next year or so in order to get to those numbers.
Okay, one final question then. You have a budget for some inorganic acquisitions. Anything that you have, sort of narrowed in on for the year? Aloke, that question is to you.
Well, see, we keep meeting interesting teams and interesting companies that can either, complement an existing vertical or help us add a new vertical. At this point, we don't have any definitive thing in mind, but like I said, as and when we will have something more definitive, we will share with the markets.
All right, we leave it there, gentlemen. Great speaking with you, and we'll talk again, I'm sure, soon. Thank you very much, both of you, Aloke and Rajnish. Good luck to both of you and the team at Ixigo. Let's